Hello, and thank you for tuning in to the Home and Finance Show. I'm Janis Bradley, broker owner of JB Real Estate Consultants. And joining me is my co-host,
Diana Rice-Wilkerson, lender with Fairway Independent Mortgage.
We are your seasoned, trusted advisors, committed to personally navigating you through the home buying and home lending process. This show is designed to provide you with current and relevant information about different aspects of buying, home selling, and lending so that you are knowledgeable when making decisions for you and your family. You can also hear us on Saturdays on Radio 1, 1310 AM, 92.7, and 95.1 FM. That's it. If you are in the market to buy, build, or refinance, we'd love to represent you. You may reach us at the contact information below. Now on with the show. Diana Rice-Wilkerson, Shelley Gutzman.
Hello.
What's up today?
This is exciting to be on this part of it. It's really exciting.
Do you know who our guest is today?
I do know who our guest is today.
Well, we're going to talk about reverse mortgage.
I love that.
That's going to be Diana Rice-Wilkerson.
Yes, indeed.
Oh, man.
And am I excited about this wonderful topic?
Well, but kind of share with us a little bit, Diana, why this topic seems to kind of hit you right there. Got to make sure we're not hitting the mic like that we were told.
You know, I believe it's because the more I am reading about our senior citizens, the rents increasing, their quality of life financially, we're just not in those situations where we can go out and work 2 or 3 jobs. Many of us own homes, but it's like, hey, maybe the solution to some of our financial stress and strain could be right there in our house.
Yeah, and you know, the baby boomers, you know, we're supposed to be the most wealthiest. We're at this point, supposed to be at the wealthiest. So
that's one thing that's got me a little whatever.
Great.
The other is that on the other end, even for people who are financially savvy and comfortable, once again, we're hearing and being taught, hey, the money that is in your house, right, could be used for investment, right? It could be used to pay off debt, reposition, reconfigure your debt, a number of things other than just it accumulating in equity.
Right.
As long as it's in the equity form, you can't spend it. It's wealth, but it's not being utilized.
Locked up.
It's locked up. Okay. Perfect, Janis. It's wealth, it's locked up. It's kind of like the reverse mortgage can help unlock that and improve your quality of life.
Okay, so let it free.
Yeah. And I'm all aware of the negative words and comments and the concerns, and I think there's some legitimate feelings around that. Just want to talk about that as well.
Let's
but
do
you know,
that.
just want to have a little bit of a conversation.
Okay.
And I think where I want to start is I just want us to think about lending in general. Number one, the reverse mortgage is a loan. It's a loan. And anytime we need a loan, it is for a purpose. And there are many different type of loan programs out there for many different types of purposes. And I say that to say, stay open-minded, stay open-minded because this loan, like any other loan, is designed to help you accomplish something.
Okay.
And so it's unique in that it's the only one that I'm aware of that will allow you to defer your payments. That's essentially what's happening. So basically that's where we want to start. I think the other thing is that when the reverse mortgage was first designed out in the marketplace, it did not come out with the government guarantee or government endorsement. It was not a government loan. And so what's important to me, just being from banking, you have government products out there in the marketplace and you have non-government products in the marketplace. Even back in 2008, when we had the financial crisis, there had been a lot of non-government products that were flooding the marketplace that people signed up for, which got them in trouble. It wasn't a reverse mortgage, it was a regular mortgage, but it was not a government-backed, HUD guaranteed or insured loan. And so when you have the government behind a loan program, that should bring you immense comfort because the government just doesn't roll out a program, especially without the protections to the home buyer. So the reverse mortgage product I'm talking about is an FHA reverse mortgage product. there are still out in the marketplace reverse mortgages that are not FHA. And so the FHA reverse mortgage requires the borrower to be at least 62. There are reverse mortgages in the marketplace where you don't have to be 62.
Wow.
But these are not government-backed products.
They don't have the security or the confidence.
Yes, right. So, I just want to put that out there because I know people have said, I know people who've lost their homes or whatever through a reverse mortgage. I just want to say, and people lost their homes in 2007, 8, because of their program as well.
Right.
But it's not the name of the product, so to speak. It's what's behind the product, what's backing the product.
That kind of security.
Yes. So,
Diana, do you happen to know how long reverse mortgages have actually existed?
Janis, I just want to say 50s, 60s, but I could be wrong about that. On some level, probably, okay? And I don't know. I should know, especially when FHA got into it, when HUD got into it, but I think it's been in more recent years.
I like that you said that it unlocks your equity, unlocks your wealth, so then you can put your wealth to use for you. Not just sitting aside, which is growing, which is awesome.
Right.
But also it's allowing you to be in control of what you want your life to be right now.
Right, exactly.
So
one more option for you to consider. The other thing with the HUD reverse mortgage, you have to have counseling. It's third-party counseling. And that was not a part of the original products, that are not government-backed.
Sure.
And the reason for the counseling is the HUD wants you to really, so these are HUD agency counselors. These are not counselors from the lending institution. These folks are separate from the lending institution. They don't care where you're getting your loan.
That's very important.
That is very important. The goal is, do you understand how this product works? And guys, I don't want to make it any more complex than what it is. It is a loan. It has deferred payments, meaning that this loan, because of the age that it's designed to help, this loan does not need to get paid back until you can sell the house and move out, or you can live in the house until you pass, and then your heirs can sell the house. Okay? But if you want to make a monthly payment, there are no required monthly payments, but let's say you say, hey, I want to make a monthly payment. I don't like the idea of my loan balance growing. It's just makes me feel weird. Make a monthly payment. I mean, you're going to get a monthly statement anyway. You're going to know how much interest accrued. If you want to pay that interest, you can do that.
There for a couple of months, and I bet you change your mind.
That's right.
Why am I doing this again? Is this the whole purpose of me getting this? One of the terms I know we have gone back and forth with, but you've brought it up, and I hear the specialist using the word retirement.
Retirement mortgage.
I really like that. I think that just feels different.
Yes.
And you hear it different.
Absolutely, and such a good point. Thank you, Janis, for bringing that up, because it is designed for that retirement age group.
Okay.
And it is designed to help you through that age range have a more financially comfortable life. That's and the retirement mortgage, and it won't surprise me if there's not some big marketing campaign maybe in the next few years where they're changing that name, because people can get it. It's like, I first want to understand what it is. Well, the reverse mortgage, it's like, well, what is that?
Yeah,
right?
It's scary,
but if you
really,
say
because it makes you think you're going backwards.
Reverse just doesn't feel good under any circumstances. And so with the retirement mortgage, at least I've now got my head kind of around that this is a product for my age range. You do have to be 62.
Like if you're married, do both parties have to be 62?
It's a very good question. No, they do not. And there's a change in this as well, which is what's a positive change. The way it's set up now is that one of you has to be 62. So let's say one spouse is 62 and the other is 42, okay? And we make a reverse mortgage to them, and of course there's no payments. So the way it's set up now is the 42-year-old, say something happens to the 62-year-old, the 42-year-old can stay in the house. Nothing changes, zero. If there's a line of credit that they had access to, no longer, okay? That's shut down.
That shuts down.
Yeah, that shuts down. No more money gets advanced out. Okay.
Okay.
No more money, but the spouse can stay in the house, and that that's been a change in the last, say, 5 to 6 years. Because before, we dealt solely with the age of the borrower. The only person that could be on the loan is the person that was at least 62.
Okay.
And that got to be very problematic, as it would be. What happens then if something happens, that younger spouse had to either refinance, right, go into a forward mortgage,
Yeah, I did have
sell
that
the
question.
house,
Yeah,
now
okay.
no more.
No more.
No more.
Okay.
So if that 42-year-old is staying in the home, so with not being able to have any additional, what did you say,
Payments.
like payments, will they then start to have a mortgage payment, or still no payment? You
No
just no
payments.
longer. Wow.
No payments.
Wow.
The only thing that stops is if they have a line of credit, or say they're getting advances from their loan proceeds, because you can have it paid out monthly, or you can have a line of credit where you can take out money as you need it. All of that stops. So the loan stops.
Because that was with the 60-year-old,
62-year-old, right.
person.
But
that was the benefit for
that-
her,
yes.
him or her.
Yes.
Okay.
But
Okay.
as far as the loan itself, it does not go into repayment. It doesn't flip into monthly payments or anything. It stays where it's a deferred mortgage.
That is incredible.
It's awesome.
So we do know that the homeowner's insurance and taxes have to be paid.
Taxes, homeowners insurance, and the homeowners warrant. I mean, the homeowners association fees.
Okay, and homeowner association
Yes, they
fees. So that
continue.
would be for whoever the younger person is still in that house. That would definitely be their responsibility.
And even the 62-year-old. Okay, so
Right.
typically with a reverse mortgage, the owner is still going to handle paying their taxes, their insurance, and the homeowners association fees. That changes, because this isn't something new too in the last, I'd say, 5-6 years. Because some people, they are in a financial strain. So when we look at their loan, maybe they are delinquent with their taxes and their insurance, that sort of thing. So now what we are able to do is set up an escrow account.
Oh, nice.
And then we pay the taxes and
Tax,
insurance
you do
out
it.
of the account.
That has to be a relief.
It's a big chunk of money because it's anticipated we're going to always pay this for the life of the loan.
Okay.
But nonetheless, it takes that responsibility off the mind of the owner. They do not have to worry about coming up with that money either.
Okay. I like that you mentioned that you have different options with that equity. Like you could get $1,000 a month, or you could have like a lump sum kind of thing.
Yeah.
And I think that's really important for people who are on a fixed income now when they retire, to now not only not have a mortgage payment,
Yes.
which is a blessing, but also that they could be receiving a monthly or a chunk of a stipend, so that they could still do the things they want to do.
Absolutely.
If they
and-
wanted to do a car, or they want to go on a trip, they still have access. Again, that money is being put to use for the life they're living right now.
Yes.
So I really love that.
So with that, I'm going to ask a question. I'm going to piggyback on that. So let's say that I'm in that situation and I am now receiving, let's say, $1,500 a month, something of that nature. So let's say, okay, I have a roof issue and I have to pay for that roof. Can I borrow, or how does that work if I need more money?
If you've got that available, you just take it off your line of credit.
Okay.
You just take it off your line of credit. And then your line of credit, what's cool about the line of credit amount increase, because keep in mind, you've got your house, right? It's appreciating each year. Real estate has always appreciated, except for when we had the problem, right? But real estate has always appreciated. So what happens also with your line of credit, it automatically gets increased a percentage each year as well. So say you have a $20,000 line of credit. Okay, it starts out at 20, and I want to say it might be somewhere between 4 and 5% each year that will be increased, which gives you
That
a little
much
bit
more
more money.
Okay.
Okay, trying to keep up a little bit with that equity going up, and
And
still
you can
giving
almost
you.
have a special, you can actually almost have that as a savings.
You can.
Because let's say you can afford your own monthly payment as far as homeowner's insurance and what have you. Real quick, we're talking about the fact that when seniors or the 62 years or older are in the home presently using their equity of no more payments, and who wouldn't want that? Also, isn't there a situation though with a reverse or retirement? We'll say, let's say I'm in my house now and I don't owe all that much, but I really am thinking about purchasing.
Right.
Can you share with us how that would work? I mean, since you're telling me that I've got this equity,
Right.
but I don't want to stay in my house.
Right. You want to downsize.
I want to downsize.
Let's say you want to downsize.
Yeah,
Okay, so
yeah.
let's say
To one bedroom. Yeah.
it sounds like a tiny house. She wants to get all the way to a tiny house.
I'm just kidding.
So just to keep the numbers kind of simple, okay? Let's say your home currently is $250,000, okay? And let's say you want to move into a condo, right? In theory, what you could do is sell your house, pay off your mortgage. Let's say you walk away from the table with, let's just say $200,000 to keep it simple. You walk away from the table with $200,000. In theory, you could actually be looking at taking $100,000 and putting that down towards your purchase. Say your house is say you're purchasing a $200,000 condo.
Right.
Okay. The difference is you went from 2-story big house to
One story, right.
We're trying to keep this math simple so it works out. Okay. So in theory, you could actually net $200,000 from the sale of your home. You purchase your condo, but you put down $100,000. It's $200,000. You're putting down $100,000. You still owe $100,000, correct? You take the $100,000 and finance it using the retirement mortgage. So you have no payments.
I have heard of that.
You have no payments. So $100,000 is getting you a $200,000 property with no payments.
And you still have the $100,000 in cash.
And you still got the $100,000 in cash.
Okay.
Right, because a lot of people, what they don't want to do, especially when they're that age, they're not trying to put all of their net proceeds into the purchase. Right. If you're working and you still got a lot of life to live, that's one thing. But if you're at this tenderoni age, you're not trying to do that. So that is something absolutely that can be done. It's a purchase mortgage. It's a purchase.
Purchase mortgage.
Purchase retirement mortgage.
Yeah, I like that. Add that retirement in it. I think that's really.
So I guess my question is how soon because this sounds like something that is a wealth or an equity manager. And it sounds like you would want, I want to do that. I'm not there yet, but I want to do that. How soon should I start preparing for that, or how could I?
I like that.
Or having that conversation, my mother is in that category.
Yeah.
But my children will also have me in that category at some point. How should we plan to utilize that to work best for us?
These are, of course, are my opinions, but I think number one, anybody that owns a home that's feeling any type of financial strain, that's 62 or older, should at least have a conversation about this program, because you could actually utilize this program to get yourself in good shape, right? And if for some reason things change down the way, right? Let's say you hit the lottery or something, right? You can refinance out of it and go back into a forward mortgage if you want to make payments. I mean, that's up to you. This is nothing that stops you. That's a one and done type of thing. Okay. My recommendation would be, number one, anyone that's having any kind of financial strain should look into it. It's just good use of your equity to me also. Even if you're not having a financial strain, if you owe debt, if you have credit card debt, loan debt, maybe need a vehicle or whatever, I would still say you want to look into it. Again, you can always make monthly payments if this is what you want to make during this process. If you're 58 and you're a homeowner, and your home, you have a lot of equity already building up in your home, have a conversation. You could at least say, hey, how many more years, do I maybe need to work? Maybe I can retire at 62 or 63.
Using the equity
in my home. I've had 3 situations that are different enough for me to talk about them that I closed on with the reverse mortgage, used the reverse mortgage. One, I had a lady whose husband passed. And so she lost his retirement income out of the household, and they still had a mortgage. And she was in her late 70s. And so we were able to do a reverse mortgage for her. We just paid off her current mortgage. She had a line of credit left that she had access to. Totally eliminated her payment, which was $1,000 a month.
Yes.
That's a big deal.
It was a very big deal.
Yes.
She said it was a lifesaver for her. It gave her then, what she had left was her Social Security to make all of this work, right? Then by eliminating that mortgage payment, she had her full check to then pay utilities and take care of herself and, taxes.
Do you know how she heard about it?
That's a very good question.
Okay,
I can't remember.
I just
I
wondered
can't remember how
really,
she heard about it.
It really was so worth it.
Yeah,
for
it
her.
could have been the radio show went from, but yeah, she did do that. The other couple, in this case, it was a couple, and they had gotten into a situation where they had a first and a second mortgage, and one of those loans was a subprime loan where high interest, you know, one of those where you keep paying and you don't see anything changing. And so this couple had filed a Chapter 13 bankruptcy. When you file a Chapter 13 bankruptcy and you have a house, then you continue to pay, right, your mortgage, and it's in the 13 payment that you're making to the trustee, but still it was a big chunk. And it put them in a financial strain. So anyway, did a reverse mortgage on their home. They had great equity. Did a reverse mortgage, paid off those loans, no mortgage payments, nice line of credit, the whole entire bit.
They went to Florida. They had a celebration. Yeah.
And then this
That's good for them.
I didn't close on this third one because the customer lived in Maryland and I'm not licensed in Maryland, but I was referred to him by someone who lived here. But anyway, his situation was he had beautiful home, he had a mortgage, and he didn't, as it turned out, he did not have enough equity in his home to completely cover the reverse mortgage. He had to bring $25,000 to closing, but his mortgage payment was $2,500 a month. Okay. And he had to make all of this work. He had to bring $25,000 to closing, which he took out of his retirement account and eliminated $2,500 a month in a mortgage payment.
So in the first year, it pays for it.
Pays for
itself.
He said, no problem, Diana. I'm like, hey, you need $25,000. He said, no problem. If it gets me out of this mortgage payment, no problem. So, you know, some of the concern, it's a beautiful program. But it's FHA HUD. We're talking the safe stuff, guys. So what happens in the case you pass, okay? A lot of folks want to know what happens to my house in case I pass. Keep in mind, your house is still in your name. Your name is the only name on the deed. That is still the case. So when you pass, your house then goes to your heirs. If you have a will, the will's going to handle it. If you don't have a will, whoever's your closest heir is going to handle it. Your closest heir can sell the property. And many times they'll give you 6 months initially to sell. But if you need more time, they will give you more time. I actually did finance a young lady. Her mother had passed and her mother had a reverse mortgage and she inherited the house. And it took a minute for her to get in position to actually take over, for us to refinance it. But they worked with her. As long as I sent her emails and kept them apprised, she could keep them apprised, it was literally no problem. It was much longer than a year, but they didn't care. No one's trying to get the house back because it's HUD. Keep in mind, HUD is never trying to get your house back. They want you to keep your house.
Good point.
So yeah.
Good point.
They're not trying to be a property investor.
No, they are not.
Owner.
They are all about home ownership.
Right.
If you want to buy the home, if you're a relative and you want to buy the home of your loved one who's now deceased, and they have a reverse mortgage, I think they will sell it to you at a 5% discount.
Oh wow!
Okay.
They make it very easy for you, but it's just a great program. I think there's over, I want to say $3 trillion in equity tied up in homes in general. Okay, I'm not just talking about seniors, but it's a good thing. But when we're at these stages in life, sometimes you need that little financial cushion. You may want to put money in the bank. You may want to just know, maybe you do want to retire, right? Maybe you don't really want to continue to work. You may not have to. If your house is pretty much almost paid off, you may not have to work at all. So just by putting that under a reverse retirement mortgage, if you have a current mortgage, and let's give you a line of credit so you can supplement your income.
Right.
You may have Social Security, you may have other retirement income. The funds that you get through your reverse mortgage are not taxable. It's a loan, it's loan proceeds.
Okay.
So it's not taxable. I think there was a couple of other comments I wanted to make. The most important thing is you definitely want to keep your taxes and insurance paid, because if you do not pay your taxes or your homeowners association fees, that can kick your loan into foreclosure.
Okay, that
Yeah.
would be a
Into
default.
kind of a default.
Yeah,
Default
into
type
default.
situation.
Absolutely, absolutely.
So what do you think really most people who kind of are interested in it, but what's the misconceptions, would you say, in this type of mortgage?
I think that people think it's too good to be true. I was talking
Okay.
to a lady who was perfect for a reverse mortgage. I explained it to her, told her how it worked, the whole bit. She understood it. And she and I had done business before, but her kids told her that has to be some type of a scam. It's like there can be no way that you're getting this kind of money and you're not required to pay a monthly payment.
Yeah.
So it's that kind of thing. And
It's just fear of the unknown.
it's
You
fear
know,
of the
if you
unknown,
don't know,
and it
you
sounds
don't know
like
what you don't know.
You mean
kind
you
of
can
thing.
actually get this kind of money and you don't have a monthly payment? You don't have a monthly payment, but there is a loan out
But
there,
there's still a debt.
and there's a
Right.
debt, and interest is accumulating. It's just designed. It's literally designed with the intention of the house will pay the loan back, not the customer. A reverse mortgage doesn't even appear on your credit report when you take it out. So if you take out a
That's-
reverse mortgage
Yes.
and someone goes to look for it on your credit report, it's not going to be
not
there.
there.
And the reason it's not going to be there is because you are not the one expected to pay it back. It's the seller of your home. Whether you sell your home and decide you're going to do something different, or whether you pass and your heirs sell your home.
Love it.
So yeah, so I think that protection. The other thing cool about it is if you take out a reverse mortgage, and I'm gonna give you this real quick example because we're getting the finger. But if you take out a reverse mortgage and let's say you owe $200,000, right? But let's say your house is only worth $50,000, right? And something happens to you, so you got $150,000 deficit, right?
Okay.
Let's say you have $1 million over here, okay, invested. That $150,000 that is the loss.
Deficit.
The mortgage company has to take the loss.
Ooh.
Well, and that's coming through HUD. HUD will take care of it. It's a non-recourse loan, so it's not going to jump over here into your other assets and say, "Hey,
Okay,
bring me
you got it.
150."
It is tied only to the home.
Only to
To
your
the
home.
house.
Exactly.
Yeah. Wow. A lot of protection.
Yes.
Lot
So
of
anyway,
protection.
so that is kind of just a straightforward, come to Jesus conversation about reverse mortgages. Hope you enjoyed it.